how can investing in real estate lower your taxes? Welcome back to the podcast. I'm here with Ed Guerrero, who is an expert with tax preparation. He's a CPA, and he's also an expert with tax strategy, founder of Guerrero CPA. How are you doing, Ed?
Doing great, Chris. Good to be here.
Glad to have you. So the two main categories of questions for real estate investors tend to be legal and tax. It's always legal and tax. They're very specialized skill sets, and details matter. Situation, a person's situation, unique circumstances matter. So here, I'm hoping maybe we can clarify some of those questions for some of the folks watching. Ready to get on?
Absolutely. Let's do it.
Okay. Now, first thing, I was guilty of this early on. Like, I'm kind of ashamed to say this. There's a lot of do-it-yourself apps, TurboTax. I'm sure there's some do-it-yourself like bookkeeping services. So before we get into any of this other stuff, like, why should real estate investors, and really just anyone in business, why should they seek out specialists in tax preparation and tax strategy like yourself, and not go with the TurboTaxes of the world?
Well, I'll tell you, Chris, after 23 years, can you believe that? I don't look like an age of over 30, right?
Yeah, you're looking pretty good there.
Over 23 years, I've seen a lot. And I'll tell you, the biggest things that I continually see over and over is where people mess up, where they screw up, or where they leave money on the table like crazy because they failed to put in their systems and their structure. I should call it their business structure. Just like buying a house, you want a strong foundation. Well, you've got to have a great business foundation, because without it, without the right record keeping, without the right bookkeeper, and I say right bookkeeper because you've got a really good one. Without the right bookkeeper who knows real estate, who understands it. I've seen a lot of mess in accounting. And then people go, hey, can you fix it? And I go, hold on a minute. I'll clap my hands, and they're going, I said, is it fixed yet? And I said, well, that's what you want me to do, clap my hands to see if there's magic behind that. I said, bookkeeping is step one. You got to have excellent records. But then the other part of it is, who's in your court? Are you playing with a tax preparer? Or are you doing your own preparation? Or are you working with a preparer that understands strategies in conjunction with preparation? So when I met my mentor about 16, 17 years ago, when he showed it to me, I was like this all the time, because I thought, this guy is a crook and he's going to get me in jail. Well, that's because I didn't know what I didn't know. And I'm a CPA. Can you imagine the average taxpayer out there doesn't even know? That's why the wealthy know what they are, what they do, how they do it. And obviously they do it with structure, the right framework, the right systems, the right bookkeepers, the right CPAs who are learning tax strategies all the time. And again, that's the key, because if not, you're going to do it wrong, you're going to screw it up, or you're going to leave a lot of money on the table. Yeah. And next thing you know, you're 50 years old, 60 years old going, I don't know where my money went. And I hear that a lot.
Yeah. So I made that mistake early on. And my advice since then is, unless you're certified in bookkeeping, don't do it. Like, and even still, you shouldn't be doing it, because you like time value of money. Like, you should be doing other things. It's not that expensive. And especially with doing your own tax preparation, whether it's by hand, which I don't know, does anyone do that anymore? Or TurboTax, like, just don't do it, because it's going to cost so much more, either in lost opportunity, which almost certainly you're going to have that, but it'll cost more to then find someone like you to fix it. Yeah. If it's fixable. Like, not everything might, because you talked about structure and foundation, some of that stuff may not be fixable, or it would just be really costly to fix. Other things potentially could be fixed. But I mean, if I handed you like an Excel spreadsheet with with 2,500 line items of expenses and say, hey, do my tax return, like, I don't know, you probably wouldn't do it. And even if you would, like, to pay someone to clean that up would be it would be costly. So I'm
That's
glad you
right.
cleared that up. Basically, you affirmed the advice I always give, like let the professionals do what they do.
Right.
They're going to save you money in the long run, and they're probably actually going to get you more money. And correct me if I'm wrong, and taking advantage of some of the opportunities that you just don't know about because you're not in that game. There's just way too much
Yeah.
for everyone to know.
Yeah, and you're absolutely right. You know, our firm, we take a proactive approach. I just finished a tax, plan for a client today, just a few minutes before I jumped on, and 130,000 in savings. And I asked him, remember your old guy? Did he ever do this? And it wasn't an old guy. It was an older CPA firm, and they never done tax planning for
And
him.
how many employees does that pay
Uh,
for now? How many?
yeah,
How much marketing does that pay for the business owner, or like even for your family? Like what does
yeah,
that provide your
yeah.
family?
That's
I mean, 100
exactly
grand.
right.
That's it's college for someone, right?
And, and,
Maybe.
and I'm glad to say I've gotten my biggest case study ever in 23 years. I'm working with this guy that we were at $15 million net profit, not gross, net.
Nice.
And I'm up to about a million, I'm 1.7 million in savings right now. And we're not done yet. We still have 20 more or 30 more days to go, right?
Yeah, yeah. Well, you still
Fight,
have
fight.
me. It'll
Yeah.
take me a couple of years to get to those numbers, but I'm happy to challenge you.
Hey, the fun part of it is that's the fun part of where I like the game. And that's my passion. It's not just doing the tax returns, but I have a whole team that does that. But ultimately, it's the strategies. That's what I live for.
So, how can investing in real estate
Man,
lower your taxes?
I'll tell you, okay, so, there's many models in real estate that can help you lower your taxes, especially, I mean, if you think of, we know the model of real estate investments, so the rentals, right? So the rentals, if you're active, meaning active, there's a difference between active and passive. If I own one property, probably passive. If I own 3, 4, 5 properties, I'm pretty much active. Okay. And you want to, when you start off in real estate, you want to become an active investor because that goes against active income. So what does that mean? That goes against, if you're a W-2 person, that goes against your W-2 income. If you're a 1099 person, that goes against a 1099 income. If that's again, all the active components of real estate investing, you have a slew of deductions. I mean, taxable, the interest you pay, the insurance you pay, the real estate taxes you pay, the repairs and maintenance you pay, the depreciation. And we're going to be talking more about depreciation, but just straightforward depreciation on a real estate gives you that extra bump to get more deductions, thus lowering your taxable taxes, thus lowering your taxes. So if you learn what I just said, all in blah, 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 right? My other taxes are a action and reduction, and then a result of lower taxes. And that's what the wealthy have learned to do. So the more real estate investments you have in the rental side, they can lower your taxes. The more you have on the commercial side, they can lower your taxes. There's a lot of different ways in the real estate world that lowers your taxes. Plus, we're not even talking about the other thing, building wealth.
Yeah, yeah, yeah. And
Other,
this is why
other people's
you
money,
hear
right?
some of the big financial advisors, whether it's Robert Kiyosaki or a number
Yeah.
of others that talk about how real estate can potentially make it tax free for you because of the depreciation. So how
Yeah.
does that actually work in a practical sense? Because me, when I read that book, Rich Dad Poor Dad, like 20 years old, I mean, it's very high level. It's not meant to be like tax advice, but it gives you, it gets the wheels turning, and that's why you turn to professionals to really like play that out. But how does depreciation in a practical sense that someone say they invest in a multifamily property, they're like a syndication deal, they put in $100,000, they're going to be getting depreciation back on their K1. Anyway, so outline how that practically works for the professional out there that's passively investing.
So when you invest in a passive state, it stays in a passive state. It's going to go and flow to. So if you invest $100,000, And let's say that's syndication, meaning a group of investors who put money into an apartment complex or a commercial building or a retail building. Whatever you're doing, they basically are pulling their money together. So ultimately, you're going to get a fraction of that deduction. So most of those plays are what they call accelerated depreciation. That's when they do this cost segregation. That's just the name of special depreciation that you can take a front load of depreciation up front the first 2-3 years, massive. You can take it over the 27.5 years, but the first 2 or 3 years, cost segregation gives you a big pow. That's what I call it, a big deduction. And now thus reducing your taxes. So the key is turning that passive into either participant or active stage, because once you do that, that flow through will go and eat up against your, like I said earlier, goes and attacks your active income, thus reducing your taxes. Now, if you're passive and you're multiplying your money, which is not a bad thing, multiplication of money and building wealth, that passive will pass over to your passive section. And if you're over a threshold of salary income, there is a point of the deduction that you can take up to 25,000. If you're married, filing joint, I believe it's 250, 275. If you're single, it's about 125,000 that you can take up to that deduction, up to $25,000 in deduction. However, when you're active, there's no limit. When you're a real estate professional, no limit. And as a real estate professional, I'll go into that. It does require some time involved, but
and for me, like that was game changing for us. Like before you get into that, like our case study, because we both had full-time jobs. This is 10 years ago. Did a few rentals. It started off very passive, but then we started doing some flips.
Yeah.
Then we bought a 29-unit apartment complex.
Boom.
Now that was very active, because that thing was a mess. Like we bought this apartment complex for like $15,000 a door. Like
wow,
you can't even buy doors for that now. Man, I wish I still owned it. But anyway, that year working with my CPA, we determined that I could qualify for a real estate professional, and our tax rate went, or like a net effective tax rate, it went down to like 5% or 4%, which from a normal perspective, I think at the time we should have been at like 22 or something, at least on the higher brackets. It went down to like 5. Like
incredible.
So
right?
How does that tie in to wealth preservation?
So when you think about it, wealth escapes everybody, right? Wealth escapes everybody from different leaks in the bucket. One of the biggest leaks in people's bucket is the tax bucket. People go, well, it is what it is. And I'm going, no, it ain't what it is. Go invest in real estate. Go do something. Go start a new company. Go. And so the wealth, again, for most people, that the big comment is, I don't know where my money went. And when I look at it, it went into taxes. They could have saved 5, 10, 15, 20,000, or even 30, 40, 50,000 every year and accumulated wealth and preserve and multiply that wealth. But they didn't, because they chose the other way, what I call fear. Number one thing that stops people from doing what we're doing, fear.
Is that fear because they view it as the tax loophole that the media, really jumps on, that these are evil rich people with tax loopholes that are basically kind of doing illegal things, but they're too big where they'll never get caught? Is that where the fear comes from?
That's part of it. Part of it is fear that comes from the media, and the other part is your own belief. Mm-hmm. So
lack of education, they just don't understand it.
Right. And if you've just been exposed to your parents, like my parents never invested, this is a quick story, never invested in real estate. They had the opportunity to buy lakefront property in Canyon Lake. 1970, Chris, $3,000 an acre. And you know what they feared the most? What if? And I heard them argue all the time. What if we can't pay this? What if we can't? And then I think, God, what if we would have bought it? What my life would have been? I would have been either a great swimmer or I would have drowned in the lake.
Yeah.
I choose to be a great swimmer, but here's the thing. What I'm saying is most of the people who have doing real estate, a lot of people who are doing real estate have had a mentor, and a lot of other people, half of the people that are doing real estate have not. But why is that? Is because we've learned to listen to Kiyosaki. All these guys, we've gone and educate. And the more you can learn just from these podcasts like this, get comfortable with it and execution. This is a good example. I've actually executed in the last 2 years, 10 syndications. I've gotten into 10 syndications in the last 2 years for apartments. Why? Because I'm comfortable. I was comfortable with commercial property. I was comfortable with residential property. I was comfortable with all that. Now I'm diversifying my portfolio. And the one thing that was missing was my investments in apartment complexes.
Yeah.
Now,
yeah, Kiyosaki talks about that a lot. I actually heard him on a podcast recently where, so I'd say the antithesis of his philosophy is more of the Dave Ramsey, like almost polar opposites, but both financial education. And
right.
but really, I mean, he was like, "There's nothing," and this is him speaking. And he was like, "There's nothing wrong with Dave Ramsey. It's just if you invest in actual education, financial education, you realize there's just so much more available." Like you can get there so much faster. We did our first syndication this year with a $42 million multifamily deal in Daytona Beach, Florida. That I'm a small GP in this project, but that was an education that took over a year of following trusted investors that I knew and other folks and having conversations. And then this year also was the first that I've ever bought crypto and I've ever bought an NFT. I actually own an NFT when for years I've made fun of it. I actually joke. It was an absolute farce as far as I was concerned, but it was education. Like I have a completely different understanding. So education opens doors, right?
That's the key. And the more you open and exercise that education, that muscle expands in your mind. You know, when I first bought my first commercial building, I still remember where I was at because it was an emotional purchase. And I mean, I was, juiced up. And my wife looked at me straight in the eyes and said, "Are you sure?" And I looked at her straight in the eyes. I said, "Yes." And then I turned around and take a tequila shot. And she looked at me like, "What'd you just do?" I go, "Nothing." and I always tell people, if you need to take a tequila shot, just get better tequila every year as you keep growing your portfolio, because that's what I've done. And I'm a serious connoisseur of tequila. And I just literally, my wife knows that I'm going to buy something big every time I bring a new bottle of tequila. And it's a big dollar bottle. She's going, "Oh, this is going to be big. Oh, this."
There you go. We did the same thing with coffee. Our first big deal when we sold it, it was like over 100 grand gross. We bought because my wife's half Colombian.
Yeah.
So we bought like a $1,500, it was like a mini Starbucks in our house. And then every time our mom comes in from Colombia, she brings us like bags of like that rich Colombian whole bean coffee. It's I love it. I was never a coffee drinker before that, but that also keeps it fun. So tequila, coffee, don't go do the Range Rover yet. Like build up.
Exactly. Or tequila and coffee. That would be a real fun one.
Yeah, that's probably an interesting drink. Save that for after 5 o'clock too. All right, so we talked about depreciation and how that can eat up income, whether it's from a passive sense where it eats up the income from the asset or any other passive assets, or it could be, if you're active, it could eat up income from your W-2, which is how I was able to go from like a 22-ish% down to like 5%. How does one qualify for, like, if you get a full-time job, is it impossible to qualify as an active real estate professional?
No, a lot of people think it is. And the truth is, it's when you really carve it out, you have to look at what's reasonable and could you work. Basically, it comes down to about 15 hours a week. Could you put in 15 hours a week into real estate? Documented 15 hours activity wise toward real estate. And most people, the answer is yes, especially if you're doing an Airbnb. I mean, if you ever try to run an Airbnb, that's a lot of time and life.
That is and my wife does it. Yeah,
Yeah.
it's ongoing. That's not a passive.
That is serious active. See, the game changed in the tax code, and people didn't realize it when Airbnb came out, or even renting your own pad or renting whatever. You're actively involved in it. If there's short-term rentals which blew up, those will increase the active activity fairly quickly. Long-term game is still long-term. It's still a good game. And then being a GP in a syndication or participant in a syndication, meaning that, I invested, but I'm getting involved in not making decisions, but I'm getting involved more so than just waiting for the distribution check.
So you're on Zoom calls with reporting and
Exactly.
management.
Mhm.
How about travel? So say you've got an Airbnb in Orlando and you go out there a few times a year to,
So all of this plays into consideration. And again, the structure and how you have it in the hours that you're applicable, being applicable to that direct real estate will count. And again, if you're traveling, some of some of that cost, or it could be a combination of all of it, or some of it will be still part of your real estate expenses. Some of it is direct costs and some of it is indirect. So when I call it direct and indirect, meaning that the direct costs are what we normally look at as the repairs, the insurance, the taxes. Those are what we call the direct cost to the property. The indirect is the management of the property. And those are all activity driven. So you write that, you keep a great calendar, because IRS is going to expect you to have proper detailed documentation to claim real estate profession.
Okay.
So you get to take a lot of deductions at that level.
Yeah. So as long as you have the documentation of the deductions and you meet the requirements, because like you said, there are a couple of requirements, time and activity wise, for a real estate professional. It's something that, unless you're just completely passive, if you're doing active work, or if you're a high net worth and like high income individual, doctor, lawyer, attorney, CPA, executive, it's worth looking into how you potentially could get that IRS designation, real estate professional, to offset your $250,000, $500,000 annual salary.
Yeah.
Because that right there is game changing. You talk about holes in your bucket. Like
That's,
when the government's taking 50%, that's a big hole.
that's enormous hole. And here's even better, Chris, what I see a lot of times, all those professions that you just said, because they're making good monies. So the spouse is at home, that spouse can be turned on as a real estate professional by educating that spouse. And here are the duties. That's what I did with my wife. I was so busy with all this stuff. I go, honey, somebody needs to be a real estate professional. Now, fortunately, she became an attorney. And so she started managing our real estate, and she's doing three days on the firm and the rest is in real estate.
That's good. I can't remember that far back. I think I was probably putting in the hours anyway, but I think because my wife wasn't working when we got the apartment. That may have been how we started that. But I mean, regardless, I get up so early and I work late, so I probably had the hours in anyway.
Right.
Okay, awesome. A couple quick questions before we close out. And I ask these questions to everyone. First one is, if you could go back and give advice. I know we talked about how you look like you're in your 20s now, but if you could go back and give advice to your younger self, what would you say?
That's a good one. I would say, first of all, work on you. Work on you, meaning everybody, you're going to find that you need therapy from the youth all the way to your old until you die. Okay. I've actually found something that I turned on in December, and I do it every day for 30 minutes. I listen to Tony Robbins every morning while I work out. And I also take care of my health by my shakes and greens.
There you go.
Every morning I have a ritual. So I created a wellness ritual with physiology, fixing my physiology and fixing my psychology. No matter what, every day I do it. And since December, my whole game has changed dramatically. And I think back, Chris, and I go, damn, if somebody would have told me exactly that,
It's
I,
like
you know,
you're getting in peak state and staying in peak
yeah,
state, right?
yeah,
Yeah.
and my energy is incredibly high. And so before I was eating 2 breakfast tacos, which I thought I was in peak state with coffee every morning, which is good coffee, but there was a difference right
Yeah.
there.
Yeah.
And I'll tell you, the therapy is needed because we go through a roller coaster of mind changes. And if you have that therapy, you're bouncing into it again and again and again, every day, every day. And so Monday through Sunday is my therapy. And so I fix my soul, my physiology, and my psychology every day, Chris. So if I did it again, that would be the change that I would make. All three, not one. And I was always picking one to work on. And then I would go to a conference to work on it. And then I would go here. No, no, no. You got to do it every day, because this is what I heard from my guy that I'm modeling. Why is it so important to feed your body every day? It's important, right?
Yeah.
Why isn't it important not to feed your mind every day?
No, absolutely. Yeah. Mind, body, soul. It's a three-legged
So I
stool.
think that's what I would change. And I mean, I enjoy what I've done. I've grinded my way through life, and I say grinded, but I've also, started investing when I was 21 years old. And again, because of knowledge, that was great. But the one thing I didn't do is I think I didn't feed my mind every day, daily, like I do today.
Yeah. Love it. Love it. What book or books have greatly influenced your life?
Man, Rich Dad, you mentioned one, Rich Dad, I look at a lot of the books, and I've been blessed because when I read like the Rich Dad, I go, I've already did that. So it validates what I did, right? And when I read Good to Great, or Think and Grow Rich and all that, I go, man, I did a lot of this stuff. So I can actually say I've been blessed by the upper spirits, because I know that there's not me doing it. I'm doing now gratitude.
You had it in you, whether some internally or enough to seek out,
right?
But was later, organized and into some great books.
Yeah, and that's the beauty of it. So now I'm working on the gratitude section, which again, I started that before I started listening to the book. But again, I would tell people, go through the stages of learning beyond what you're typically doing. Learn other things, not just do one thing. Learn multiple things and learn it from different people, because there's not one person that's going to give you everything, but you should have a mentor. And like you said, you modeled something, and when you model it, you compress time.
Yeah.
And that's the one thing I've learned. I'm modeling after now billionaires to compress time. So I don't need to go figure it out. They've already figured it out. So the guys that are billionaires, I go, okay, how did you do it? What did you do? Give me some insight so I can compress my time.
Yeah. Yeah. I mean, it's not that difficult. It's ultimately doing it, because the information's there.
Yeah.
You can absorb it, but then you got to put it into action. So you've been doing that. And I love when like Gary Vee's been talking a lot about gratitude lately. And I've heard some in-depth practical, like, when he's been challenged on that, and, and I've seen the practical implications he's talked about. It's pretty profound. It seems overly simplified, but it's actually pretty profound. In the past 5 years, what new belief, behavior, or habit has most improved your life? I think you already touched on that.
I think that, the rituals that you create early morning every day, how do you start your day? It's the key, man. I'm not a late night person, but I'm an early riser, which I thank God that I am. I like waking up at 4:30, 5 o'clock every morning, having my rituals, and how I start my day makes my whole day complete. And by the time I'm ready for bed, I have a ritual every night, what I do for bed. And it's amazing, because when people go, man, you have a lot of things on your mind, how do you sleep? I go, man, I sleep hard.
Because when you're on, you're on. I'm the same way. When I'm on, but
right.
I mean, unless that weird moment where I just get like this great idea, for the most
Yeah.
part, I'm out.
Yeah, me too. I'm blanked out. So, yeah, just it just the rituals that you do morning and evenings, they matter, So you've got to pay attention to what you're doing.
All right. Well, it's been a real pleasure, Ed. How can folks reach out to you or your firm? How can folks get a hold of you?
Yeah, so call us at 210-490-7100 or send an email to I always say send an email to Jill, but you can send me an email and I'll forward it to Jill. She's my assistant, and ed@guerrerocpa.com. 210-490-7100. Call us. We'll give you a free consultation and help you out and see if we can be your CPA. If not, you at least learn some things from us, and that's cool.
Love it. Thank you so much.
All right. Thanks, Chris.
Talk to you again soon.